Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Banzee. It's July 13th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. You'll also see which stocks are giving you overbought and oversold cluster signals within the S&P 500 at the bottom of those emails. In addition to that, we're heavy users of Twitter. If you're not doing so already, I would encourage you to follow me at Brandon Van Z is my handle. We really appreciate those of you that click like and retweet on these Market Outlook related posts. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. As we get started here, I wanted to show you this chart that I just was looking at here a moment ago. This is chart 6D for those of you that are following along at home. But what I've done here is I've changed it to a 3-year weekly chart. Normally we're looking at a 1-year daily, but this is a 3-year weekly. Just to kind of emphasize how one-sided the trade has been here in the last, let's call it 3 or 4 months or so. Down below here, kind of in the middle of this chart, you'll see how much the market is either up or down for a full week's worth of information. Now, most of you know, as I mentioned, I think last time when I did the video, we haven't had a 1% down day in the S&P 500 for over a month. In fact, it's almost 2 months at this point since we had a single 1% down day. But to take that notion a step further, even when you're looking at weeks, remember there's 5 trading days in a week traditionally, so it gives you a greater chance of having a 1% move because it's stacking days on top of each other. Even from that perspective, we've had just 2 down 1% weeks in the S&P 500 basically in the last, let's call it 4 months. You can see this big red candle right here, or this bar, that represented the worst part of the regional banking crisis. It seems like a distant memory at this point, but that was in early March. And if you start just looking at the information after that moment in time, it's been tremendously one-sided for the bulls. Not only do you have way more green bars here on a weekly basis since then, but most of them are up more than 1%. And then when you get the rare down week for the market, it's been rare to see it even down 1%. You've had, let's see, 1, 2, 3, 4, 5, 6 down weeks in the S&P 500 over the last 4 months. And of those 6, just 2 of them, here last week happened to be one of them, and then about 4 weeks ago was another one that was down more than 1%, in other words, stretching down beyond that 1% level. And then kind of with your eyes, just eyeball this area underneath where I'm kind of circling right now, and then compare it to almost any other time period on the chart, right? And you can see that 1% down weeks happen very, very regularly. They happened a lot, of course, last year. This is kind of where I'm circling in the middle here. Remember, this is a 3-year chart in total. So this is kind of the last year very difficult period. But even before last year, in what felt like a one-way market to the upside, remember that year of 2021, the year of the SPAC and all of the craziness when it comes to stimulus checks and all that kind of stuff was just being pushed into the market. It was like a runaway freight train to the upside. Even back then, I feel like there were more 1% down weeks in the market than they have been here recently. This has been basically like a ghost town of red bars down here. And again, to emphasize how different it is to the upside, look at the consistency of the greens to the upside. This week, we're up over the 2% level. A couple of weeks ago, we were up over the 2% level. A couple weeks before that, we were up over the 2% level. A couple weeks before that, we were up over the 1% level. A couple weeks before that, we were up over the 1% level. Then you had 3 in a row right here up at least 1%, with one of those up over 3%. So this is definitely a bullish market environment that we find ourselves in, and it has been extremely consistent in its bullishness. The other thing that is kind of worth noting here is down below you'll see kind of the pathway of the VIX. Remember, the VIX is kind of inversely correlated to the S&P 500. Sometimes it's referred to as the fear index. So when market participants are bullish and pushing stock prices up, traditionally the fear gauge is going lower, and that is where we find ourselves right now. The VIX is at 13 at this moment. Remember, for much of last year, we were talking about VIX between 20 and 30. So we are basically 50% of the levels of the VIX that were just totally normal and commonplace just a year ago. So it's been amazing to see the turnaround in market conditions in just 1 year's time. Last year felt like death day after day after day. This year feels like elation or a parade day after day after day, where it's just, the chase is on, so to speak. Another thing to be aware of is we're not all that far away from all-time highs here all of a sudden. Notice the S&P 500 right here, and again, this is a weekly candle we're looking at, but we ended at 4510 today. We're above 4,500 on the S&P 500, and you'll notice that the all-time high on the S&P 500 was put in the first week of 2022 when we got up to about 4818. So we're only about 5 or 6% away from all-time highs. Remember, last year we were down 20, 30% depending upon the index. Well, right now we're only 6% away from all-time highs in the S&P 500. It's a good reminder that it pays to be a long-term investor and look beyond just, the chaos of any one given moment in time, whether you're looking at it from a weekly perspective or a monthly perspective or even 1 year, right? Even 2 consecutive down years is a very, very rare feat for the market. And so once again, the bulls are winning this era. All right, let's go ahead and come on over here now and take a quick peek at our heat map. You can see here, after such a strong day in the market, no surprise, we had a lot more green than red on the charts here today. The ones that probably stand out the most to you are Alphabet, which was up about 4.7% today, one of the top performers in the market. Remember, they've been in kind of the AI wars there with Microsoft and ChatGPT. Well, anyway, Alphabet came out with some enhancements to their Bard AI, or artificial intelligence, and it's now available in more countries and different things like that. So that kind of lit a fire under Google shares here today, a big, big mover. And remember, they had been a bit of a laggard compared to kind of most of the other Magnificent Seven out there. So today, maybe playing a little bit of catch up there with Alphabet. The other one that really stands out is NVIDIA down below. NVIDIA, if I'm not mistaken, was actually the best performing stock in the entire S&P 500. And remember, NVIDIA has been basically the story stock of 2023. Talked about here a while back how my top-down trend trading class was fortunate enough to buy it in February, and little did we know, but we were about to double our money in just 4 months. And what has it done since that time? It's just kept on going higher. That thing is just in coast mode to the upside. Eventually, the party's probably going to end, but until then, enjoy the good times. And today, it closed nearly at $460 per share, up almost 5%. Another stock that catches your eye is probably Amazon. Amazon's a $1.4 trillion company these days. It was up 2.5%. Of course, Amazon's been in the news for the last 48 hours with their Amazon Prime days, and I certainly spent more than my fair share on their site here in the last couple days, so perhaps I wasn't alone, and the stock market was rewarding shareholders as a result. Tesla also had a fairly strong day, up over 2% here today. Microsoft was up 1.6%. Apple was up 0.41%, and then Meta was up 1.32%. So you'll notice that today, all of our Magnificent Seven were to the upside. In my top-down trend trading class, we had a conversation today about the Magnificent Seven in my Q&A class, and I was mentioning that we were fortunate enough in our top-down trend trading class to have 5 out of those 7 and nearly 6. There was one that we didn't quite vote for, but it was up for debate one week. But we've been quite blessed as trend traders this year. And what's remarkable about that is it's exactly the opposite as last year. Last year we were in the doghouse. You tried buying a trend or chasing price or anything like that, you were going to get punished severely last year. This year has been exactly the opposite. It has been a home run to the upside for many of those companies. So, and they're not alone. There's a lot of other trend trades that are rocking it right now as well. I think the new highs minus new lows is at a new multi year high at this moment. So the breadth has kind of expanded beyond the Magnificent Seven, even though the Magnificent Seven still is kind of the key to the market story at the moment. So great news there. You can also see that some of the banks were up today. JP Morgan, Bank of America, Wells Fargo, Citigroup, all in the green today, mentioning them specifically because we're going to start hearing from those banks as soon as tomorrow. Remember, we're now into the earnings season for the next quarter. And so tomorrow we'll hear from JP Morgan, Wells Fargo, and Citigroup. So that could have some impact on the market. You'll also notice that on the downside of the market today, you saw a little bit of selling in some of the oil majors. Exxon and Chevron were both down. Home Depot, Lowe's, TJX, O'Reilly, they were all down. So kind of a little bit of a give back there in some of those discretionary names, and then kind of a coin flip within healthcare as to who was up and who was down, but another day where you did have a smattering of selling there within healthcare. But that was about it. For the most part, we had a very, very green day once again here in the market. Let's go ahead and take a look at the specific numbers now. And over here on the Market Watch tab, now you can see that 347 out of the 500 stocks in the S&P 500 closed higher here today. That was good for about 69% of the index closing in the green. So again, very broad-based advance here today. Let's take a quick peek here now at our foregrid and kind of see what this means for our posture now using the Market Forecast Technical Indicator. And as you're looking at these four different charts in front of us representing the four major U.S. equity indices, you can see that we are back to green background colors on all four of the charts. Remember when I was with you last on Tuesday, the Dow had a brief flirtation there with some bearish posture, but it didn't last long. We're back to the green background color once again. And of course, that has been the case for the Russell 2000 for the last 2 weeks. That has been the case for the NASDAQ for the last 2 weeks. And that has been the case for the S&P 500 for the last 2 weeks. All of these charts, of course, still have their green 30-day moving averages as well, telling us that price is above those rising moving averages. And we're starting to see some breakouts to the upside as well. Notice on this chart here, we've got this little green tag that lights up above the charts if it's hitting a 52-week high on that particular day. So with the S&P 500, it hit a 52-week high. In fact, this is the highest level the S&P 500's been at since April of 2022, so well beyond 1 year in that case. Same thing can be said for the NASDAQ Composite. It also hit a 52-week high today. NASDAQ was our big winner today. You can see it was up 1.58%, and this is now, it looks like, the fifth day in a row to the upside, and easily breaking beyond that double top that kind of existed there from June 16th and then again here in the beginning of July. So crossed nicely up and through that without very much difficulty whatsoever. That's a great sign for a trending market like we have right now. So both the S&P 500 and the NASDAQ looking pretty strong. We did have another question in my Q&A class today about the impact of the upcoming NASDAQ 100 reorganization, where they're going to be shaving off some of their largest companies, some positions there in their largest companies at least. So if you're interested in that conversation and my take on that, feel free to watch the Q&A recording if you're a premium member. But that's going to be interesting here in the next couple of weeks to see if that has any ability to slow down this runaway freight train in the tech stock world. The Russell 2000, you can see, was up 0.91% today, so not quite as much as the NASDAQ, but nearly in line with the S&P 500's 0.85% move. But what was really impressive about the Russell 2000 is, once again, we are in breakout mode, right? I talked about that on Tuesday on this candle when we had just barely eclipsed that prior resistance area over here. Well, the last 2 days have done nothing but emboldened the bulls even further in the small cap universe. All of a sudden here, we almost saw that green line fall out of the upper reversal zone on the Market Forecast Technical Indicator. And just like that, snap of the fingers, notice that the green line is all the way up here at 92 now. Anything above 80 is upper reversal zone. So we're in kind of the upper half of the upper reversal zone after just a week, when you have a week that looks like this, basically straight up. That was a perfect test of that upward trending 30-day moving average. Market came down, kissed it, bounced right directly off of it and broke to new multi-month highs. Now note that this is not a yearly high on the Russell 2000 the way that it was on those other two. Nonetheless, this is a new multi-month high for it, whereas the Dow Jones, kind of our laggard still, it was only up 0.14% here. And you can see that it has yet to break beyond this high that it set back here on June 16th. So we'll see if the earnings announcements can push it up and over and kind of join the others in what has been quite the party for the bulls. All right, that'll wrap us up for the day. Once again, we didn't quite get to 100 likes there on Twitter, so seems like you guys are enjoying these shortened 15-minute versions a little bit more. So if that is the case, continue not to click like on Twitter. On the other hand, if you want to see me get back into my mode of hour-long videos, then you'll want to contribute by clicking like for the post over on Twitter. So we'll let you guys decide that over the weekend. I hope you guys enjoy your time, whatever you find yourself doing. I think I'll be taking my son camping. Looking forward to that. And then we'll get back into the swing of things early next week once again. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.